Good morning. Paul Georgie from Allendale. It's September 9th, Monday morning, and grain market's mixed here as we open this week. Rain that was forecasted over the weekend was a little less than was expected, and in areas that actually were not expected, but the southern Iowa region didn't get any rain this weekend. The next 5-day forecast is for about 30% coverage of the Corn Belt. And that's giving soybean markets some reason for strength here this morning, although they have backed off of their early opening highs of last night. We've got crop conditions reports out this afternoon. Corn down 2 to 3% in good to excellent category. Soybeans down 4 to 5%. We may even see larger percentages than that, just as a normal seasonal decline at this time of year, where we do have a change in appearance. Stocks are starting to dry down. Harvest is getting closer. We've also seen a drop in corn basis here last week and over the weekend. The harvest is getting started in corn, and in the Midwest as the early planted corn is being harvested. Producers are taking advantage of the premium that processors and elevators have been offering. We've seen some of those premiums back away rather quickly here as this new crop corn starts to get harvested and sent directly to the market, as even with the higher moistures, corn is being harvested. We've got the CFTC report that was out on Friday that showed that the funds increased their short positions in corn and wheat and increase their long positions in soybeans. In soybeans, they increased by about 20,000 contracts. Corn and wheat, they increased shorts by about 8,000 contracts. We did have some export sales here overnight. South Korea is reported to have bought 60,000 tons of corn, likely from the Black Sea region. Other groups and buying groups in South Korea bought a 260,000 amount of corn earlier in the weekend, as it was reported late on Friday. So there's been some good corn demand. However, it appears none of it's coming from the U.S. As the U.S. continues to hold a premium to Black Sea and South American corn. The calendar of events this week, we've got some potential volatility in the grain markets. Thursday morning at 11 o'clock, we've got USDA crop production and the supply-demand numbers coming out. Right now, the production numbers are all focused on yield. Soybean yield 41.2 is trade average. That's down from the USDA's number last month. And corn at 153.7, that's also lower than USDA's last month estimate, only not very significantly, as ending stocks in corn will likely still double from what we have this marketing year. Other things happening this week, we've got the September contract going off the board on Friday. That could create some excitement, as September futures still hold a premium to the December contract. We've got Congress voting on the Syrian action and what type of action will be taken there. That could happen early this week and could create some uncertainty and some volatility in the markets. In the livestock trade, the big news there that the U.S. Committee of Foreign Investments made their announcement that they approve the sale of Smithfield to the Chinese firm, and that could have some impact here this morning as we open these markets. Pork cutout values were up 68 cents on Friday. Beef cutout values were lower, down 63 cents in choice, down 72 cents in select. The CME feeder index was up 28 cents. That was all the way up to 156.36. Expect some very choppy trade. The pork complex had had 6 days of higher markets, 3 of those days notching new contract highs in the nearby contracts. The question is how many more days of this short covering and fund buying will we see? So use some precautions there, use some risk management stops to protect your long positions if you're trading on the long side in these nearby contracts. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.